Ladies and gentlemen, the precious metals market is exploding right now, and experts are sounding the alarm like never before. Silver is racing toward unprecedented levels, with analysts highlighting a vertical phase activation signaled by a massive 13.83 candle that could propel it straight to $250. At the same time, physical shortages are hitting hard. APMEX has imposed a $500 minimum order, effectively rationing silver and locking out small buyers. This isn't just hype. It's the monetary system breaking down before our eyes. Japan has just pulled the plug on the global economy, and a massive Indian whale is cornering the silver market. Gold and silver are set to surge amid DOJ probes into Fed Chair Powell. If you're holding physical metals, your exit strategy for 2026 is critical. Don't sell too early. Welcome to this urgent breakdown. Stick around as we unpack every data point and catalyst driving this historic rally. Silver's technical setup is screaming breakout, with experts noting the activation of a vertical phase that mirrors history's biggest moves. That pivotal 13.83 candle isn't just a blip. It's the signal for silver's sprint to 250, repeating patterns from past bull cycles. Current prices are already at $95, as massive new supply discoveries emerge. 2 billion ounces found in Greenland, with China bidding a staggering $300 billion to secure it. Yet despite this potential influx, demand is overwhelming supply. Analysts emphasize the gold-silver ratio, GSR framework, to time exits perfectly. Don't sell at $100, they warn, as ratios will guide the optimal sell points. One expert even revealed selling 25% of their position already, using this precise method. The chart action is undeniable. With momentum building for parabolic gains, catalysts are piling up faster than ever. Japan's dramatic move to pull the plug on the global economy, likely through aggressive policy shifts or yen interventions, has ignited fears of worldwide contagion. This ties directly into the DOJ's probe into Jerome Powell, which experts say will erode confidence in the Federal Reserve and supercharge safe haven demand for gold and silver. As the monetary system cracks under pressure, questions loom. When should you sell your stack? Analysts are outlining clear 2026 exit strategies, stressing that holding through the initial surge is key. The Indian whale's aggressive cornering of the silver market adds fuel, hoarding physical supply and squeezing shorts. These aren't isolated events. They're converging to break the COMEX manipulation wide open. Physical market tightness is now official and brutal. Silver rationing at APMEX with a $500 minimum order means small retail buyers are completely shut out. Dealers are prioritizing whales and institutions. This echoes historic squeezes, confirming that paper silver is decoupling from physical reality. Experts note that such restrictions signal the endgame for suppression schemes, as real-world demand from industrial users, central banks, and stackers overwhelms available bars and coins. Greenland's 2 billion ounces discovery should flood the market, but China's $300 billion bid shows nations are racing to stockpile ahead of shortages. If you're not positioned in physical yet, the window is slamming shut fast. Rationing is just the beginning. Macro factors are aligning in a perfect storm for precious metals. The DOJ investigation into Powell exposes deep cracks in U.S. monetary policy, potentially leading to a Fed pivot that crushes the dollar. As global trade phrase, Japan's economy-killing decision reverberates through supply chains, the dollar's reserve status hangs by a thread. Geopolitical tensions amplify this. China's aggressive Greenland play signals a resource war, while the Indian whale's moves hint at emerging market power plays in commodities. Inflation data ignored by mainstream outlets is surging, devaluing fiat and driving capital into gold and silver. Analysts highlight how these macro drivers, combined with central bank buying, are setting the stage for silver to eclipse gold's performance dramatically. Price targets from top analysts are bold and specific. Silver at $95 now, but the $13.83 candle targets $250 in a vertical sprint. Don't exit at $100. Use the GSR framework for precision, as ratios could stretch further before correcting. Gold is primed for its own surge alongside silver, with experts predicting multi-fold gains as the system unravels. One analyst's 2026 silver exit strategy pegs optimal sells post $100, potentially into $200+ territory. China's $300 billion bid underscores long-term bullishness, even with new supply. These aren't wild guesses. They're backed by technical history repeating and physical scarcity metrics. Expect volatility, but the upside asymmetry is massive. Diving deeper into the GSR framework, experts stress it's your best tool for timing. Historically, extreme ratios signal silver's catch-up phase. Right now, it's primed. The advice is clear. Hold core positions, sell increments like the 25% already trimmed by savvy players. For gold holders, integrate silver exposure to maximize returns. As monetary breakdown accelerates, these ratios will flash exit signals clearer than price alone. Analysts warn against panic selling at round numbers like $100. Patience pays in this cycle. The Greenland bombshell, 2 billion ounces of silver, should be bearish, but it's not. Why? Because China's $300 billion bid reveals governments are front-running industrial demand for EVs, solar, and tech. This discovery, hidden until now, proves supply can't keep pace with exploding needs. Pair this with Japan's global economy unplug, and you've got commodity chaos. Silver's industrial dual role as money amplifies its upside. Physical rationing details are chilling. APMEX's $500 minimum locks out the average stacker, forcing premium spikes on smaller lots.